welcome to Pro Trader Strategies market commentary for Tuesday, December the 1st. Yes, people, it's almost over. 2020 is almost in our hindsight, 2020 vision. Anyway, my name is Eric Wilkinson. Some of you may very well recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. And I do the same thing for you folks out there, but I'm going to layer on top of it some option strategies that I find to implement into my portfolio based on those market assumptions I come up with. For you all, what I've done is I've streamlined the process for finding any option strategy for that directional assumption. It's not just going out there with a bullish assumption and buying a call and just willy-nilly picking what duration. No, what I've done is I've created a process for you guys to follow so that you are assured that you have the best option strategy for that given assumption. All right, so without further ado, let's get on with that economic data, see how it's impacting the overall markets, and talk about some trades possibly. All right, so across the pond, we got some manufacturing PMIs. Now we're starting to get into that PMI rotation, the part of the month that we start getting this kind of data. And PMI is Purchasing Managers Index. Something about that data point, the reason why I love it so much is because you think about the person that is employed at the manufacturing sector, and what their job is to order product in order to bring raw product, raw material, before it's refined, bring it into the manufacturing process, create something, and then sell it. Now, the reason why this is so important is because the purchasing manager is forward-looking. He's looking at demand coming in and trying to facilitate that demand. So he's forward-looking rather than reactionary. Retail sales are already behind us. That's already happened. What this person's doing is seeing the retail sales, seeing the demand, and trying to create the supply. That is why it is majorly important. Now, we got these PMI numbers across the pond. Their major one that we look at, the most important one, is the flash estimates. Now we're getting these manufacturing PMIs, which are more of the refined numbers there. So, but we've already kind of seen this, all right? This is a bit of a lagger in that sense. So across the pond, let's talk about Spanish manufacturing, French, German, major manufacturing sectors. Everybody else is kind of like whatever. But we did get that number, so we might as well look at it. It did come, one other thing with the PMI numbers, anything above 50 is expansion, anything below 50 is contraction. All right, so Spanish manufacturing comes in at 49.8, expected to be a 50.8, so missing by a point. Well, it missed by a point, but what's more important is it came in below 50, and that is contraction. So that's something to keep an eye on. Not one of the two major sectors of the European region that are manufacturing sectors, though. Well, we got the French manufacturing coming in at 49.6, expected to be 49.1. Still below 50, but better than what was expected, so that's a good thing. And then German final manufacturing PMI right in line with expectations at 57.8. That, again, above 50. That is a good thing. The rest of the broader European region coming in at 53.8, in line with expectations there. Also in Europe, we got the, final manufacturing PMI for the Great Britain area as well is 55.6, expected to be 55.2, so better than expected and above 50. Now, Europeans CPI, Consumer Price Index, usually what we look at this for is inflation. That shows that there is demand for different products driving prices higher. That creates inflation, right? Well, also the weakening of the dollar will do that as well, or the weakening of a currency. But what we got here with the flash estimate for the Consumer Price Index, negative 0.3, expected to be negative 0.2. Obviously, we'd like to see that number ramping up. That would show that there is strength in the economy. Core CPI, Consumer Price Index, for the European region. Keep in mind this strips out food, energy, and tobacco, but it came in at 0.2%, expected to be 0.2% there. Now, let's move over here to the United States because we got our own PMI, which is in the form of the ISM, which is Institute for Supply Management Manufacturing PMI. Again, coming in above 50 expansion. It came in at 57.5, albeit was slightly lower than the 57.9 that we were expecting. Still above 50, good reading as far as I'm concerned. A little bit lower than last month's reading of 59.3, but still, we've had about 6 months in a row of this expanding PMI, which is a good thing. Vehicle sales, Ward's vehicle sales. Keep your eye out for Phil LeBeau. He talks all about these vehicle sales. That's going to be important to know because remember when we're talking about retail sales, core retail sales, we strip out some of those automobiles as well. So that's going to show up. We'll be able to see that in more of a detailed minutia. Now, we also had Powell testifying in front of the Senate. And what he was talking about, the banking committee, banking committee. Anyway, he was coming out and just talking about how the small businesses really need some PPP, some more PPP right before this Christmas holiday. There's people that are shutting doors left and right, at least around where I am, where they finally, said uncle and they decided to close some stores. So we don't want to see that. Small business is what drives the economy. You get too many big businesses, it's you lose some of that price elasticity for the consumer, which is not a good thing. They can jack prices up, right? We also have Lagarde speaking right now, and so is Bernard, who is an FOMC member. All right, so let's talk about the overall markets. Crude oil just slightly off on the day. It keeps wanting to test that $45 a barrel area. We've gotten below that. I do expect us to go down and test that 40 handle. I don't think that we're going to see enough strength in the economy to facilitate a higher price in crude oil. Now, we could see, we have these OPEC meetings that are being done. Yesterday I mentioned that they all meet in the stairwell. Well, because of COVID, they haven't been doing that, but that's something that they do. Generally, now they're doing Zoom meetings or whatever. But limiting its supply could keep some buoyancy to the crude oil market here, but we are starting to lose a little bit of strength here. Glad to see it back below 45. A little bit of strength in the dollar we're seeing, but beside that, we're seeing a nice move here in gold. A lot of that probably having to do with Bernard and Muchin. I can't think of how to say his name right now. I'm all out of sorts, people. Anyway, you get who I'm talking about. All of those people talking about more stimulus, need some print some more money. Well, if you're printing more money, that's going to make these gold bugs really start moving higher here. Or making gold move higher, right? Bonds coming off almost 2 full points today. And I was really expecting us to drive up there and test this 50-day simple moving average right here. Test that 176 handle and expecting us to break through that into the 178 handle because I just do not see us getting out of this anytime soon. Yes, there is a lot of talk about all of these vaccines and things of that nature, but that's still not going to be around before like middle of next year for the most part. Right now, we need lower interest rates. We've already seen some of the housing market struggle as well. One of those things that we did notice, I forgot to mention, was the construction spending number came in really nicely at 1.3%, expected to be 0.8%. They did revise last month's number down, though, by about what we beat on that, actually a little bit more. It came out last month, it was positive 0.3. It came in negative 0.5. So that revision does kind of wipe out that construction spending headline number there. All right, VIX. VIX is unchanged for the most part, but we've got the equities moving higher. We got the Dow Jones after yesterday's big sell-off up almost 260 points on the day, 255 as we speak. NASDAQ up 188 on the day. Something to note, we've got this Fibonacci extension where I've got, or the Fibonacci right there at the high that we saw. We do have a print here of a new high in the NASDAQ, and it's bouncing on this trend line. For me, this bullish type of move in the equities, as we're looking at it right here, is actually quite nice. It's we've gotten higher highs, higher lows. We're not spiking at a vertical like we saw after the recovery from the COVID outbreak. This is a bit of a steep climb usually, and this kind of move is more indicative of a more healthy rally, all right, where we get the pops and the sell-offs there. So NASDAQ looking very strong, up 190 now as we speak. E-mini S&Ps printed this overnight high, but I believe this overnight high might have been or this high right now might have been the overnight. I haven't looked in a couple of minutes, but I can't remember exactly what the overnight high was. But we are feeling very strong in the markets today as we come in. We did print that overnight high in the day session, so that is solid. But yesterday started getting a nice bounce at the end of the day. Overnight, very bullish as more and more people are talking about this vaccine. And today, a little bit of consolidation after we've gotten that high, but markets just seem like they are ready to pop. We talked about that whole winding up of the rubber band that we've gotten for 2 weeks here, and a bit of a snap here. It feels like the market wants to snap to the upside, all right? So rather than what we've been seeing, that move possibly breaking to the downside, I think now the risk is to the upside here in the equities. And with that being said, I'm kind of holding on to everything I've got right now. That Tesla trade, yesterday I did get the late day sell-off, which helped out, but today popping by about $17. Not looking so great for that trade, but I do think that we are seeing the EV sector really start to struggle here, as what I just recently heard and didn't know before yesterday, but the EV sector is the most heavily shorted area of equities. And the reason why is because the valuation on these guys is so astronomical. It's hard to really comprehend, to be quite honest. And we're seeing the Tesla trade move higher, and part of those, NIO. Now, this is one of those trades that I did look at way back here when we were trading around 15, 16, 17 area. I was telling people, if you really want to play Tesla, this is the poor man's Tesla, that you could take advantage of that type of EV market. Now, I didn't get involved in this just because it's a Chinese company, and I don't really believe all the economic or all the data points that comes out of China. So I kind of stayed away from this one. They consistently lose money, and they are knocking it out of the park, though. So, still something to keep an eye on a big pullback here in NIO. It is the Chinese version of Tesla, really. So, it's a little bit cheaper to get involved in than you would have to with Tesla. But not a recommendation. I'm not involved, but it's just a talking point with these EV markets really coming off. I mean, Nikolai is just getting crushed, but they were down 25% yesterday, and I think it's continuing today to bleed them. But all of these EV are struggling, at least recently. And that's about it. Like I said, I haven't added anything to my portfolio, just keeping an eye on everything. Looking for opportunities. I went through all the charts today, looking for opportunities, and just there's nothing jumping out at me. Hey, if you know something, reach out to me in the comments section here and say, hey, why don't you take a look at this, and I'll do some market analysis on it. Please comment, give me a like, thumbs up. Let me know how you guys are feeling about this. And one last thing, take a moment to go over the disclaimer. Sorry, it's over there. And that's about it. Other than, if you can't take that, take it easy.